1 year ago today, stocks hit their lowest levels of the pandemic-driven sell-off as COVID-19 effectively shut down much of the world. Over the following 365 days, the market's unprecedented action made the history books. Plus, fresh off a rejection from TikTok, Microsoft tries to court another social media company. And finally, say goodbye to all those $30 airfares. Travel demand is picking up again. I'm Pippa Stevens, and this is CNBC After Hours. Stocks finished lower across the board as all three major indices closed in negative territory. And right after the closing bell, we finally heard from GameStop in the company's first earnings report since the wild Reddit-driven trading activity earlier this winter. Revenue came in lower than Wall Street was expecting, but the earnings release is just a preview. The real event here is the conference call, when analysts who have an average price target of about $14 on a stock that just closed around $181 get to question management about what exactly happened in January. And right after the release came out, the call was at max capacity. That's definitely a first. Be sure to head to CNBC.com for all the news from that call. But today is an important market day regardless of GameStop. Exactly 1 year ago, stocks hit their lowest levels at the depth of the COVID-driven sell-off. The fall was fast and furious, a roughly 30% decline just about 1 month after stocks hit all-time highs in February. The bounce back happened at lightning speed as well. In a matter of months, we were back where we started, and today, we're 75% higher than March 23rd, 2020. The market has never seen such a fast whiplash. Bob Pisani can put it all in perspective.
So the main aspect of this whole program from the Federal Reserve and Congress in the last year has been go big. Do really aggressive moves to keep the economy afloat. Stimulus checks, increase unemployment assistance. Do anything you can to put money into the hands of people. Flood the world with money. That's what the Federal Reserve did. They just massively flooded the world with money, and they flooded it with new programs that have sort of backstopped the overall economy. And then Congress passed several stimulus bills, almost totaling $6 trillion. And the effect of all of this was it kept the economy afloat. That's the most important thing. The stock market had a stunning turnaround. It dropped 34% between February and March of 2020. That's an amazing drop. Think about it. A 1/3 drop in about 6 weeks. And then it recovered all of it 6 months later. And we're more than 70% higher now in the stock market. And the reason the recovery was so strong was because the Federal Reserve and Congress acted very, very aggressively to keep the economy afloat. Why did they decide to do this? Because they've had 80 years of lessons with crises in the past. Now, this COVID thing is very unique in that it was a pandemic. It was not a real economic thing, but still, it was a crisis. It was the biggest crisis since the great financial crisis of 2007, 2008, and 2009. And what the Federal Reserve learned in that crisis was go big again. Ben Bernanke was the head of the Federal Reserve, and he made his entire career studying the Great Depression. That was from the 1930s. And what they had concluded about the 1930s depression was it wasn't the stock market drop in 1929 that really caused the depression. That was just a factor. What really exacerbated the whole thing and made the 1930s really bad was the Federal Reserve and the government didn't do anything to assist people until the early part of the 1930s, and by then things were really bad. So Bernanke said, listen, if anything disastrous ever happens while I'm on watch, I'm going to be big. And in 2008, 2009, they pushed through very aggressive programs. What they learned as a result of that was they should have done even more. And that's why Janet Yellen has been all over the place saying, go big, go really big, because they saw in 2008, it helped turn the economy around, but it took years. It took 6 years for the stock market to come back to normal. This time it took 6 months because they were so aggressive in helping people out. Of course, it helps that we had a vaccine. If we didn't have a vaccine, we wouldn't be where we are today still.
Okay, let's get to our sound check. Here's a roundup of the day's biggest action and what the top newsmakers and business leaders had to say on CNBC's airwaves.
With the passage of the rescue plan, I'm confident that people will reach the other side of this pandemic with the foundations of their lives intact. and I believe they'll be met there by a growing economy. In fact, I think we may see a return to full employment next year.
By showing that our low dose works, we now have the supply chain to treat almost all the high-risk patients who need it every month. This is really big news. This can really make a big difference for all the people who are still getting infected and still at a risk for hospitalization and death.
This is something that every company is going to set their own policies around, and companies need to be transparent and clear with their employees. But our priority is to make sure that our customers have the tools in order to ensure that their workplace can be safe.
For Jack Dorsey, obviously, his tweet was sort of the first tweet. It was like a major moment in internet history. And if you're the kind of person who collects NFTs, maybe this is your version of Paul Revere's Midnight Ride or something, a historic event that you want to own a collectible of. But I think most people, I'm going to try selling a couple of my tweets, but I might get enough money to buy a coffee or something like that.
Airline stocks have been falling for the past week, but they've all registered massive gains since the market lows 1 year ago today. American, Delta, United, and JetBlue all posting staggering triple-digit gains during one of the worst years for the airline business. The industry lost tens of billions of dollars in 2020 as consumers stayed close to home. In an effort to fill seats, airlines offered dirt-cheap fares, some as low as $30. But now, vaccines are more readily available, and President Biden says everyone will have one later this spring. That means summer travel plans and a lot of competition for those cheaper fares. Leslie Josephs explains.
For many people, it is getting more expensive to book a trip. Those eye-catching double-digit fares, those $30 tickets, while they are still out there, are getting harder to find because you do have more people traveling. So travelers are feeling more confident about getting out there, getting on a plane, booking a hotel, booking an Airbnb. So earlier this month, President Biden said that everyone in America will be eligible for a vaccine by May. And that has spurred some confidence. We heard from Kayak that searches for summer travel were up 27% every week since he said that. We've also seen hotel occupancy rise around the country. STR data showing 51% occupancy, which is still not good, but it's the highest in over a year. And also in hotspots that have been very popular with vacationers because they're open. Take Florida, for example. Miami occupancy is over 70% now. That's the highest also in over a year. So we are seeing demand kind of tick back. So because more people are traveling, we are seeing some airfares tick a little bit higher. It is still very cheap to travel. We're still more than 30% below the passenger volumes that we were at in 2019. But because there are more people traveling, those eye-popping fares, those double-digit fares that you get in your inbox, they're going faster. So what the analysts have told us is that they expect it to be a little bit harder to find those bargains. So because you are competing with more people. And airlines know this. So they put out these very eye-catching fares, but they're only for a certain number of seats. So of course, you click through the website and maybe you kind of already have it in your head that you want to go to Florida, you want to take a vacation, you have the destination in mind. And okay, it's, $30 more than what the advertised fare was, $40 more, $50 more. Another thing to note is that Americans don't have a ton of places to go. It's not like you can just plan your summer vacation to Europe. So you have more people that are planning their trips in the domestic US.
Okay, time for the numbers round. So let's kick it off with $10 billion. Microsoft is in talks to acquire messaging platform Discord for more than $10 billion, according to a report from Bloomberg. Sources told the publication that Discord, which lets its reported 140 million active monthly users set up chat rooms to communicate via text, voice, and video, has been talking to potential buyers, including tech giant Microsoft. Although no deal is imminent, a merger like this makes sense, especially since Discord's services is wildly popular popular in the gaming community, which could fit organically with Microsoft's Xbox business. That being said, one of Bloomberg's sources says that Discord is more likely to go public on its own rather than sell itself to another company. Next, 400,000. Evanston, Illinois is officially the first U.S. city to offer reparations to Black residents for past discrimination and the lingering effects of slavery. City Council voted last night to distribute $400,000 to eligible Black households. Each household would receive $25,000, either for a down payment or for home repairs. The money for the program is coming from a mixture of donations and a 3% tax on recreational marijuana sales. This move from Evanston comes as hundreds of communities and organizations around the country are considering plans to provide reparations to Black Americans. Though some efforts have been underway for years, they've gained momentum after the killing of George Floyd by police in Minneapolis last May. And finally, one. In an effort to encourage adoption of the COVID vaccine, Krispy Kreme is offering one free glazed donut per day to anyone, not just its own employees, who can show proof of vaccination. The promotion comes as businesses rush to offer incentives to their workforces to get the jab. Kroger is awarding employees $100 plus another $100 in store credit to get vaccinated. And a growing list of companies, including Instacart and Trader Joe's, are giving workers time off and extra cash to get their shots. We have a whole list of all the different ways companies are accommodating the vaccine rollout. Get all the details by going to CNBC.com and downloading the CNBC app. That's it for After Hours. We'll be back here in our home office every Tuesday and Thursday, so be sure to catch us then.